Alright guys, so in this video we're going to be going over breaks and retests of horizontal support resistance levels. And as usual, we're just going to look at the conceptual part, the theory portion first, and then what I'm going to do is I'm going to take you guys to the chart so we can actually see this happen in the actual market. So essentially, from what you've learned based on the foreshadowing of everything else you've learned so far in this program, is that let's take for example a resistance level. Price typically comes to an area, bounces away. If it comes to it a second time and bounces away, this level starts to get slightly established as resistance. Then it comes like a third time and starts bouncing away. Then it's pretty clear that for some reason this price right here on the chart is acting as a resistance level, or you can call it a horizontal level. Call it a horizontal support resistance level. You can just call it horizontal level, whatever you want. But essentially it's just an area where price keeps bouncing away from. Now what happens in the case that price gets above this area? Well, that would be called a break of a horizontal support resistance level, or a break of a level, or a break of resistance, however you want to call it. And then after price gets above that area, in this case, if price comes back to this level and then gets this level right here, this is called a retest of this horizontal support resistance level. And then on this retest, price will either hit this level, pause and start bouncing, and then end up going away from it to the upside, or price will hit this level, try to bounce, but instead of going upwards, price breaks back below it, and then it may test it as resistance again and then start dropping, or maybe price will come up to the level again and then break above it again and start bouncing there as support, and price can just interact with these levels a lot. So that being said, all we're looking at in this section is just this thing right here, the break and retest. So there's not much to cover on this, and I used to go into a lot of detail when I would teach support resistance and breaks and retest, but I want you to know that it is truly not complicated at all, and I'm not going to make it complicated, and I'm not going to go on for a long time about it. I'm just going to teach you what it is, and I'm going to show you a few examples, and that's literally all you need to know. Everything else would just be needless complexity. So for the case of looking for buys, we're obviously going to want to have our clear trend. So as long as we have a clear trend going up, if I'm wanting to draw this a little bit better, be something like that. This will have been like a previous level, and then in the past price may have bounced along this this little uptrend area, then bounced here, and then it would be like bouncing here and then maybe going up. So like I said, you want to have a trend, and then within those trends these breaks and retests occur. So whenever price breaks a level, you want to see it clearly break the level and clearly move away from the level. You want to see it clearly make a retracement. This move where it comes back to the level is just called a retracement. Price revisits the level again, it retraces back to that level, and then you want to see price test the level and start bouncing before you make a trading decision. So in short, price has to be in a clear trend, and as long as it's in a clear trend, you want to see price come up to a very established clear level. You want to see it break that area, come all the way back, and then start bouncing. Okay, and we're going to examine exactly what to look for when it's bouncing before you enter at a later lecture in this course. For right now, we're just interested in learning, just introduced to this concept and understanding what to look for on the chart. So price breaks above a level, comes back and retests. Much like this case of wanting to take a buy, let's say you wanted to sell the market or short the market. If price is in a downtrend and it keeps on breaking new lows and then coming up and then testing and then breaking lows again, coming up and then breaking lows, and price is just hammering in a downtrend, well, you're just going to identify whatever the trend is like my 10-year-old drawings of all these trends, and then you're just going to identify the horizontal levels as price is going down and as price is painting new levels and stuff like that. And then as price continues downwards, all you're going to be doing is looking for, during the downwards movement, breaks and retests of these horizontal levels to then take for sells. And then sells, obviously you would be looking to capitalize on the market moving downwards with your sell position, with your sell trade. So it works the same way. Support and resistance, looking for buys, support resistance, looking for sells. When you're looking to sell, you're looking for a break of support, and then for price to come and retest that level as resistance. Whenever you're looking to buy, you're waiting for price to break above a resistance level and then come back and retest that resistance as support. And then as support, if it starts bouncing away, then you look to take your trade. So let's look at it on the chart. Let me go to a random pair. Let's go to CAD JPY. Let me go find something very clear for y'all. I'm going to cherry pick an example, so that way It's just you can see it very clearly, and then we'll go and look into more examples that are a little bit more tricky. So here's a good example. So right here, as you can see, we had like a resistance zone right here, right? Like price had a resistance zone. So whenever we're looking at this pair, GBP New Zealand dollar, on the daily chart, it was pretty obvious that this pair was just moving upwards. So price was just in an upwards direction. So as price broke that upwards direction, or as price was going in the upwards direction, we had a resistance form during this uptrend. So price had broken above this high right here, tested as support, came down to the trend, tested and went up, and then price looks like it broke above that previous high right there, came down and tested it as support and started bouncing and started going up. Then price had cracked above this high right here, like that's the high, there's a second high of resistance. So price cracked above that area right there, and then as it was in an uptrend, cracked above this area and it came back and tested this level as support. So as support right here, price then bounced and it went up, then it broke this high right here. After it broke that high, it came back down and tested that high as support right there, and it started bouncing away. So all you're looking to do is just identify the clear direction, right? So in this case, it would be an uptrend. And then you're just looking for breaks and retests of these horizontal levels within the uptrend. And it's pretty straightforward. You got to make sure it's a super clear area where price is like made a clear high. And then if price breaks that high, comes back to retest it, just wait for price to start bouncing. And then the idea is as it starts bouncing away, to take your buy right there, have a target below that area, and then, have a target above that area, and have a stop loss below that area. The idea would be that, price would continue up to maybe the previous high, or maybe it would like crack the previous high and go up and make a new high, then come back and test this one right here as support. Then it would start maybe bouncing and going up, and it'll just keep doing this until the trend's over, until price breaks out of the trend and then forms like a new trend. So let's look at another example. Let's look for like maybe a downtrend. So here's a good one on AUD US dollar. If I go to the daily chart, you can clearly see that overall price is moving downwards. So had you just been given this information right here and connected all the highs, you would have been able to tell like everyone in your family and your dog and your grandma's aunt's sister, which would just make that your grandma, whatever. Everyone would look at a chart like this and say, yeah, it's clearly going downwards. I mean, look at it. Price is making new lows and it's making lower highs, stuff like that. So that being said, whenever price got below this area, price cracked out of a couple lows. Price cracked that low right there. It cracked out of these two lows, but let's just say the most recent one was right there. So price cracked out of those previous lows and it made lower lows down here. So the idea would be to wait for a retest of the broken levels and see if you can make a trade as price goes away from the level. So that being said, right here, this most extreme low down in there, price looks like it came back to that level and then it started rejecting it and bouncing away. So if you had decided to take a trade right here, you could have placed an entry like right in there. You could have placed a stop somewhere above this level, which would have been, right in this area, above the trend and above this resistance, and then a target just somewhere lower. It could have been that previous low, it could have been maybe one of these lows down here or something like that, but just a target lower. So an entry, to capitalize on the market, simply continuing its downtrend. And this right here, that was a clear low right there, and it was the most recently broken low. Price came up to retest that low, and then it was also the downtrend. So that's why in the beginning of this whole section is that the three components you need for every trade: a clear direction, we have a clear direction right here, and then also on top of that we have a break and retest of a previous level. This previous low, price broke that low and came up and retested it, and then on top of that, remember how I put in parentheses, you really want it to retest the trend as well? This is why, because if it retests the trend as well, because this is like, that's pretty clearly like the downtrend area. Price is coming up and retesting its trend line or its downtrend or its downwards direction. Price is retesting it right there, and it also just so happens to be that price is retesting a previously broken low. We can call that support right there, and then now it's acting as resistance. So the fact that price broke that level, came up and retested it, along with retesting its downtrend, that's not one, but two reasons that price may be looking to fall away from that zone. And as what happened here, we saw price come to this level, we saw price pause and go sideways for a little bit, and then it started moving aggressively downwards. So you would have got, if you would have taken a trade up here, you could have at least made a little bit of profit on this trade as price pulled away from here, a couple percentage points of your account. If you're just using a simple 1-to-1 risk reward ratio and you entered, let's just say like down here as price started moving away, if you had your stop loss up there and then your target down here, price would have like plummeted into your target within a few days. And this is just with like a 1-to-1 risk reward ratio. So that being said, this one looks pretty good. And what was this? This was simply just a clear downtrend, and then price had gone and made like a low, broken that low, come back to retest that previously broken support level, that previously broken low, and then also it's retesting its downtrend. And then on top of that, started rejecting before falling away. So we're going to learn, like I said, about like what to look for in the rejection. The idea that I just want to get you guys used to seeing is go to the H4 and daily chart, identify the clear trend, and then look for the most recently broken levels. And we'll go through a few more examples here. But all you're looking for is just breaks of those previous levels and price to come back and retest them. It's really just that simple. Like I said, I've gone into crazy detail about this before in some of the videos that I used to have in the course, but I realized that there's not really that much complications if you just keep it this simple. Like all you're really looking to do is just trade price as it breaks previous highs or lows and comes and retests them. And then, those highs or lows can act as support and resistance, and price can bounce along those levels within the clear trends. So that being said, I'm trying to find one more really clear one so that way you guys can. So let's look at this one. This is the trade I actually took. So on the daily, I've just connected the lows and I've connected the highs. So we have a potential downtrend right here, and then we also have these lows that are connected going upwards. So for the time being, on the daily, from the overall perspective, price is moving in a downtrend because it is consistently making new lows. Price is also trying to find a little bit of support because it's also looks like it's going higher right here. Like this looks like a higher low, and this looks like it might be a higher low. So price has the potential for going in an uptrend, but when price was up here, that's all I was seeing. Just that stuff right there. So just very likely that, hey, price is coming to like its downtrend zone, may look to reject. And then what happened is I took this trade right here at the very top of it because price had broken this previous set of lows right there, coming up and retested it, and it was also along the trend zone. What you could have also done is, since it's in a downtrend, you could have waited for a break of recent lows, which was this right here. See how price made this cluster, this little support resistance zone right in there. This was like resistance, then price bounced away, support, 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 but it finally broke that area, came up and started retesting as resistance before starting to go down. You could have just looked at this trade or looked at this market and said, okay, I've connected all of the highs on the daily chart and here on the H4, and it just looks like market is moving downwards. It looks like it's moving in a downtrend. Price had come up, rejected that downtrend area, and then on top of that, it ended up breaking a support zone. It simply came back and retested that support zone and then started bouncing away. You could have entered a trade like right there as it started bouncing away. Put your stop loss above the previous highs and then just set your target lower. And in this case, if we're just doing a 1-to-1, which you can play with this and you can like tinker around during your demo practice period, whether or not 1-to-1 works good for you, whether or not 1-to-2 works good for you, like a 1-to-2 risk reward ratio, maybe like 1-to-3, or if your target is dynamic and you can do this and that. I suggest starting with just like a 1-to-1 risk reward just to get the hang of it, because it's so easy to be profitable that way, and then you can tweak your trading system over the course of the 2-month demo practice period, so that way you kind of like mold the system into something that works for you with your time constraints and this and that. But even if you're just using a 1-to-1, you could have entered there, had your stop loss above all these levels. The stop loss is in a good place here because it's above this horizontal support resistance zone, and it's also above these previous highs, and it's also above the downtrend area. So if price is going to continue downwards, having a stop loss up there means that it's going to be very hard for price to go up there and hit your stop loss. Like the market would have to make a complete shift in its daily sentiment in order for price to go and do that. So what's more likely that it's going to happen? Well, it's more likely that during a downtrend, price is simply going to continue down. And in this case, it did. So I didn't take this trade right here. I took the trade up here as it came and started rejecting along that daily downtrend zone. And it also, some people said in my group, they're like, this is a previous resistance zone. And they started like dragging their zone like that and like that. To me, that wasn't clear enough. What I do know is that this area right here acted as resistance before, then it acted as support here, and then price came up to that level again and started acting as resistance. So what I considered this as is like a break of that low, and price went way down here, and it simply came back to retest those broken lows within this downtrend. So if we're keeping this trade simple, let's go and look at this. All I did was I connected, let me make it look more like a downtrend. All I did was I just connected a series of like 3 highs, and then price had broken the area, come back down here, then broken low, and then it came back up to retest that previous low that it was at, along with the downtrend area. And then after price was rejecting the downtrend area, as well as this horizontal support resistance zone, price started rejecting it and falling away. I simply just entered a trade as it was falling away, and my trade was actually further up in here. But I simply just entered a trade after I saw rejection of that zone within the downtrend, and then I had a stop above and a target below, and the trade worked out. It was a nice trade. I think I made like 1.8K on that trade. I think I made like 1,800 on it because it was a 2.5% risk. So that being said, it worked out fine. This was fine. I had a 51 pip stop loss, 56 pip target, ended up going straight to the target, and it came a lot lower, all the way down to these previous lows. But I want you guys to understand how simple this trade was. It was simply a downwards direction, a break, and a retest of a horizontal level with rejection. And I simply just took a sell, put a stop loss above and a target below. That's how simple it is. So that being said, when it comes to breaks and retests, there's no need to complicate anything at all. You're just identifying a clear direction, whether it's up or down, and then within that clear direction, you're just waiting for some clear highs or lows to be broken. And then we also call that, break of support or resistance. And then for price to simply come back and retest that zone and start bouncing away before you make a trading decision. Okay. Same thing with the downtrend. Price will come up to these zones right here, start rejecting, falling away. You'll just identify a horizontal zone, wait for a break of that horizontal zone, wait for price to come back. And then if it starts retesting that horizontal zone along with the downtrend area and starts falling away, you'll simply look to take a sell, put a stop loss above and a target lower. And if price is going to continue in its trend, it'll typically go down and then hit your profit target. That's all we're doing, guys. Breaks and retests of horizontal levels during trends on the daily and 4-hour chart. So what I've done is I've taught you what breaks and retests are. I've taught you what you should look for when you're doing them, some of the dynamics that go with them, the time frames you look at them on, the daily and 4-hour, and I've also given you a few examples. So I hope you took good notes in this video, but like I said, this stuff is really plain and simple. So with that, I'm going to move forward to the next video. I will see you there. Bye.